How we doing, traders? Welcome to Stock Market Movers, where we get you the headlines and, of course, get you the expert opinions that you guys need to hear. Today's show is going to be a little bit more of a laid-back show. The last show of the week as we got to go towards the New York Stock Exchange. I'm going to be going and doing a tour on the New York Stock Exchange, doing some interviews, giving some outlook towards 2023. And of course, don't miss our coverage from the Qualcomm Investor Day as Chris and I take a trip to New York. Of course, the adventures continue like always. In today's show, we still got some topics to talk about, though. We're going to get into, of course, what is going on across the pond in Europe. Then we'll take a look at Ford, GM. We'll take a look at all the ratings, upgrades, and downgrades that came out today. A lot of them moving some stocks. We'll touch on UnitedHealth and getting the go from federal judge. Intuit, we'll talk a little bit about that. Amazon Prime Video stepping up. What's happening in car price trends? What seems to be the issue there? And of course, we'll keep moving on with what was hot and what was not. We'll take a look at the gainers and losers. And if we get a second, we'll go back to, of course, our interview from yesterday. If you guys missed it, because it was near the end of the show, stay tuned. We got a great show for you today. Stock market movers, like always, let's see if we can battle in this market and make a profit. There are 3 ways to make a living in this business. Be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. All right, let's go ahead. Let's dive into the market and see where we're at. It was a choppy day, and it looks like the chop continues right now. Let's get into the 15-minute as it looks like we're starting to head towards the downside here in the SPY. Looking for it to eventually break 382.20 on the downside. That's the daily level that's really important to watch. You can see it here, 382.11s. 382.18s. Are we going to break through those levels? Are we going to get through the 382 level and really just get down there through that 382? So let's actually move this closer towards 382. I can kind of get it exact if I edit it here and just put it at 382. So we'll see what happens there. Do we break the line by the end of the show? If we do break that, the next level down for me is going towards the 371s. So it's interesting to see. Will we get a little bit of a front run into the FOMC meeting? Of course, it's going to be coming tomorrow. Don't miss it, guys. We will cover it right here on Benzinga. You don't got to go anywhere. We do, of course, got the boot camp. But what we will do is, of course, at 2:30, give our FOMC conference stream right here. Don't miss it. Fed Chair Jerome Powell. We'll see if we get some fireworks. What are some comments that I would expect for you guys to kind of pay attention to? Well, any comments on the economy showing some weakness is something you're going to look for. He's going to mention, of course, labor market comments. Pay attention to that. Are they seeing any weakening of the labor markets, or are they just still pointing towards that they expect to see unemployment start ticking up? But that's actually the intended outlook as they're, of course, raising rates into it. Of course, soft landing, probably a mention that you could hear out there. Any mentions of the word pain? I know that we've talked about that before, so pay attention to that. And of course, any dovish comments. Do you hear anything about flipping? Do you hear anything about a new norm of inflation? Or maybe do you potentially hear anything that would give them signs to show that there is a slowing down of the economy? I think one thing that I think you'll hear on is CPI data being some of the focus that will be mentioned by Fed Chair Jerome Powell. And he's going to say that this is exactly what we don't want to see. We want to see inflation really heading down and in a faster manner than we're getting it right now. Of course, we need to continue to watch to see what happens there. Sorry about that, guys. Just keep getting calls. Bunch of scammers. You know how it is. Scam likely. That's how it is nowadays. We'll see if this SPY takes out the 383s But of course, FOMC meeting is on everyone's radar. Remember, at 2 p.m., you get the minutes, not the minutes, you get the release, the press release from the FOMC conference. And then at 2:30 will be the fireworks, where you actually get that conference with Jerome Powell. And the Q&A is where really a lot of the times we see some movement. All right, let's continue. Let's get into the topics that were out there. Of course, across the pond, we did get some kind of comments. German producer price inflation hits 45.8% year over year, showing the increase of inflation. If you think it's high here in the United States, just imagine across the pond how they're dealing with their energy crisis and how inflation is really taking rampant. But let's keep going. Let's go to Sweden. Central bank here also raising some rates, 100 basis points. Soaring inflation was undermining households' purchasing power and making it more difficult for both companies and household to plan their finances. So there you guys see it. They're trying to take down the inflation that's out there. And of course, this is what a lot of people are suffering. It gets to a point when really you got to start planning, or it's no longer now, do I go to the off brand? Do I actually have to start cutting some costs? And I think that that's what they're referring to more, is it's really causing the purchasing power of these homes to make some difficult decisions, right? And I think that that's what they're trying to support. And what's the support? Get inflation down. And this is what we expect to hear also from the FOMC meeting. All right, let's go into Ford now. I think we can go into Ford. Of course, you guys saw the price action, and it continued down towards the 13.28. I talked about how eventually I could see Ford getting towards $11, but let's talk about what news hit the tape, right? Well, let's take a look here. If you take a look here on the hourly, you can see how it's gone down significantly. And a lot of this was in the after hours, after Ford Motor after hours warned investors that the company expects to incur an extra $1 billion in costs on the third quarters due to inflation and supply chain issues. They said also it resulted in parts of shortages affecting roughly 40 to 45,000 vehicles. They did reaffirm its full year guidance, saying it expects to deliver the vehicles to dealers in the fourth quarter. But that wasn't all that we got. Of course, wouldn't you know it, after GM heard that Ford came out with some pre-warning, wouldn't you know it, General Motors coming with some positive news, trying to shake up the stock here. And it's still getting hit hard on the intraday action, but they tried. They came in with some news in the middle of the day here. General Motors agreeing to sell up to 175,000 electric vehicles to Hertz Global over the next 5 years. The company announced this on Tuesday. Of course, this isn't the first company to have a deal with Hertz. Of course, you guys know Hertz HTZ. And you guys can see it's actually going down off of that, even though you got the volume pump there on that GM mention. But of course, this is over the next 5 years. So it's not affecting the stock too much right now. And you guys are seeing it get hit hard. And a lot of this, of course, off the heels of that Ford mention. A little bit later into the show, we're going to talk about used cars and news car. So stay tuned for that talk. That's going to be towards the end as we get into more of a conversation today and a deeper dive into new car prices and used car prices. What is going on there and what kind of trends are we seeing? All right, let's keep going. Let's get into our ratings talk. And in a little bit after the ratings talk, we'll go into what was hot and what was not. Ratings upgrades and downgrades. The first one is going to come from Susquehanna downgrading PayPal here. PayPal is the one getting the hit. A lot of these kind of getting some hit on their kind of ratings, but downgrading the holdings to neutral, lowering the price target to 100. And 100 isn't even below the price point. It's actually above. So to me, it seems more and more like this analyst was trying to get it really close towards that 100, give it the upside outlook. But if PayPal breaks here through the support, through the 90s, watch out, because you could easily be right back towards those 70 price points. We'll see what happens on PayPal. Next one up, let's get into it. Let's go towards Nike. Nike is definitely getting hit hard on this. I was wondering, were we going to get some lift in Nike? Will it hold on to 100 today? Let's talk about the rating here. So Barclays downgrading Nike to equal weight, lowering the price target to 110. And you can see, what did they do? They picked the price right above the price action. It seems to me like these analysts are chasing the price action here in these names. So just be careful with those price targets. It feels like they were just chasing what was on the board technically. All right, let's keep going. Let's get into the next one. If you guys have any comments on these, feel free to throw it up in the chat. Want to catch up what you guys are talking about. Was I right about the Head and Shoulders? We're about to find out. Well, we'll see what happens there, Jonathan. Definitely. What else is being mentioned on out there? I see Easy Susan in the chat. Miss Whitehorse. Richer and wiser. Apple decided not to go my way today. Went up instead. It defied the SPY in 80% of the market. 100% richer and wiser. I'll talk about that when we get into what was hot and what was not. We can talk about the correlation or lack of correlation that was there in Apple today with the market. All right, let's continue going. Let's get into some of those headlines. All right, so let's go towards the next one there. We did Nike, we did PayPal. The next one would be, of course, WDC, which is Western Digital. Let's go into that. As we're seeing Western Digital Corp now down to 35, definitely a beaten down name and out of favor here. As you get in some Deutsche Bank analyst Sidney Ho downgraded Western Digital shares from hold to hold from a buy, citing weakening demand for the data storage company. We believe WDC's revenue and EPS are tracking below the end of guidance, and outlooks look meaningful below the current street estimates. So keep that one on your radar. Definitely seeing some downside action in WDC, but this stock has just been weak and weak and weak. It just continues going down. Every pop seems like it's sold. All right, last ratings earnings that we're going to cover. We're going to get into LAZR. This is one that I was watching today for hourly pullbacks, and it looks like we got that hourly pullback. And it came back below, went actually through the low there and started filling some of the gap. We actually got the gap filled and then boom, right back up there. So this one doesn't look too bad. What happened here with LAZR? Let's talk about it. JP Morgan initiating coverage on Luminar Technologies with overweight rating, announcing price target of $30. So keep that on your radar. $30, not a bad price to kind of see. And will we get up there? I mean, this is definitely a little bit of a higher bet, right? I mean, they're betting all the way back over here in the 30s. We'll see if it can get back there. One of the things that I like Luminar Technologies is for their deal with, of course, NVIDIA. They actually have a deal to kind of team up with their auto department. And I think in the long run, NVIDIA, LAZR, definitely an opportunity to kind of check on out. And you could tell a lot of SPACs have gone down to like maybe $5, $4. This is up there, and it just went down there towards $5.85. So I definitely think that was an opportunity. But now you're seeing it come back. We'll see when it's able to close above 100. And look at the 200-day moving average on the daily, 1166. We can get back over that. You might get a nice little uptrend. Of course, this is, for me, a longer kind of investment stock, but we'll see what happens there. LAZR is one of my favorite in the LiDAR area. All right, let's continue going. Let's get out of JP Morgan, and then we can get into some other topics on out there. We're going to get out of the ratings land. There's still a lot to talk about, so hit the like if you guys are enjoying today's show, and let's keep going with some other mentions in the market. All right, next one in the market that I want to talk about is UNH. UNH getting some lift here today, of course, on the judge approval here. And so it's a judge approval for the acquisition here on Change Healthcare. And so let's take a look how Change Healthcare is doing here. And you're seeing that spike. Where did that spike come from? Well, it came from this release of news. It came from the federal judge approving and getting the go to buy Change Healthcare, and Change definitely getting a little bit of a spike, but more of an arbitrage style type of play. If you were already in it, You probably were able to nail some of that trade there. UnitedHealth getting some lift today. All right, let's get out of that. Let's go into everybody's favorite segment, which is what was hot and what was not. All right, let's go into that. Let's take a look at the trending sectors and industry in the markets today. All right, so let's do this. Like always, what I like to do is work top-down approach. And if you could take a look at it, everything is still in the red from the open, showing us how much of a bearish tape we're having today, even though we had a bullish tape yesterday, and we still haven't broken through kind of those yesterday lows. We are still having a pretty bearish tape. What's keeping us up? What's holding us on? Well, there's a few pockets of relative strength on out there. Let's get into one of them. You guys mentioned it earlier, which was Apple. Apple holding on here. I actually drew this trend line and look where it got up to. It all the way up there towards almost 158 today and didn't really come down. I mean, the SPY has been down pretty much all day long. You did get that pop above VWAP, but compared to Apple, that's a different type of chart. Now, one thing I will note is that Apple started turning around here, and now we need to see, will it hold the support here around, let's say, the 156 level. If we don't see that, we could easily start seeing it crack with the leaking that we're seeing out there in the market. Tesla is the other one that kind of kept on up, but look at this rounding top that we just put in. We'll see if that kind of can hold if you come back up through those levels. But if not, if we do break down for any reason and get below the open on Tesla, be careful because some of the stocks are definitely leading down in the SPY. Weak stocks, Microsoft, right back into the red. This is one chart that I've called warning flags all around because whenever I see these weekly trends being broken, that's when we can see probably the hardest downside action in my eyes, at least technically. And so if we can't recover 250, watch out there for Microsoft. You could be back down there towards 225, maybe eventually cracking through that. So just keep it on watch. This has been such a great mover since kind of 2018, really making a move on up. Then 2020, you came down in the pandemic and you didn't even crack through. You were all the way down at 135. So we're still holding relatively well for Microsoft. I'd be looking for some pullbacks towards 225 to see if we can dip our toes in Microsoft. But it's a ugly looking chart when you start breaking those kind of weekly long-term trends, and it needs to get back to 250 in a hurry. All right, another one that's breaking down on the trend is Amazon. And now you're starting to really start kind of cracking here. This is what you want to keep a watch. Will you come back to kind of fill this kind of gap that we just got a couple of days ago? Or are we just going to continue to leaking through this kind of trend line and then just holding that as resistance and heading back down there towards the 100? If we break 100, that's going to be definitely a troubled look. All right, just give me 1 second, guys. I'm getting a quick call. Going to play a Benzinga trailer and going to keep going here on Stock Market Movers.
Introducing portfolio synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, sorry about that. Was getting an important call that went ahead and let them know that I'm live with you guys and you guys are taking control right now. All right, so let's keep going. Of course, the press conference is at 2:30 tomorrow. Of course, we get kind of the release at 2 p.m. So I also say read that release. That's going to be in the news kind of from the Fed site. Read the release first before you get to the conference. This is what most analysts do, right? They read that, then they look at the reactions and kind of the voice comments that Fed Chair Powell makes from that release, right? He reads it right to the key, right? So if you read this ahead of time, you at least know what he's going to say in the early parts of his speech, but then you're looking to see what happens in the Q&A. That's really where we can actually get the fireworks. Rounding top, is that an inverse cup and handle? No, rounding top, I'll show you what a rounding top kind of action is. So there's a couple of patterns, right? Rounding top, what you're kind of seeing there is kind of when you don't get kind of that linear pattern, right? A lot of times we'll get kind of linear patterns that kind of show on up. And I'm trying to save an image right now to kind of give you guys an example here of that Tesla rounding top that you saw. That we've kind of mentioned in the intraday action, right? This is only in the intraday action. This isn't going to show up on kind of the longer term. And you can see it here, this rounding kind of top action. I'll show you what this pattern kind of looks like when you're looking for it. So here's the action here. Just kind of got a kind of pattern here from someone, MetaTrader here looking at it. So you can see here, this is kind of how the rounding top kind of looks. A lot of times you're going to get kind of that spike going into this action. And all of a sudden you start seeing a bunch of wicks up there at the top, some selling pressure, kind of the curving action. A lot of the times brings us back down. What it means also by a rounding top is that it's not exactly holding resistance at just one level. It's holding resistance kind of at an average around there. And so sometimes you get rounding tops and you get rounding bottoms. So it's just something to keep on watch. Nothing that you really need to kind of know too much about. Maybe just look into the pattern and how you can see it also. All right, Brian, you want to talk about how people are positioning for tomorrow? I'll save that to right when I'm done with what was hot and what was not, and then we can get into how you think people are positioning for tomorrow. All right, let's continue going into what was hot and what was not. Let's go into the certain sectors. Do we got any industries into the green? There's not many. Tobacco is in the green today, but it's not a big move, right? It's Philip Morris getting a little bit of a lift today. We'll see if it can actually make that move back towards the high, which would be 96.65 is trying to hold the VWAP bounce right now. We'll see what happens there, Philip Morris. Where else are we seeing at least a little bit of a pocket of strength? It wasn't in oil. We saw Oxy head down really quickly out the gates. Now it's starting to recover a little bit. We'll see how these stocks end the day, but it did come down from those levels. Real estate came down big. Utilities came back big. Consumer cyclicals, for a while there, the reopening trade was looking good. You can see it in kind of like Carnival Cruise Line. It was trying to get through 11, trying to get through these 11s, trying. It couldn't do it again. Now we're starting to get some rejection down from those 11s. We'll see how far they can start cracking. AAL saw it being strong yesterday. Now it's pulling on back here. This is how quickly the story can change. Even though President Biden got these stocks also moving yesterday with talks of the pandemic being over, boom, AAL definitely taking a hard hit now in the last kind of 15 minutes. And we can think of UAL there. Look at that down action. Airbnb, down action. Hilton, down action. So it looks like the reopening trade falling off the tape here, and you're definitely seeing them pull back today. All right, if there's anything that's strong that is catching your eyes, feel free to throw it up in the chat. That's what it's all about here. You guys run the show also. All right, let's keep going. It's about 1:30 here. We got about half an hour left to the show. I'm going to try to do my best to keep things hyped. I know that I don't have a guest today, but we can keep going into stocks. And if you guys have any question you guys want to expand upon, like we got Jonathan talking about positioning for tomorrow, let's definitely talk about that, right? Let's talk about what we think is going to happen and how we could be positioning into tomorrow. All right, let's keep going. Let's take a look there. I'm going to get out of what was hot and what was not, because to tell you the truth, most of it was not hot. I mean, there's not many stocks that we were getting towards the upside. Apple is one of the few that is into the green today. If you think on the S&P 500, I'm going to try to take a look at what is in the green here overall. And there only seems to be about like 20 stocks. Moderna getting a little bit of a bounce back today. CF, this one not looking too bad now as you're getting some lift in CF. MOS is one that I was watching here. It is pulling back, but CF is looking really strong. So keep your eyes on those two names. We'll see what happens in those agricultural inputs. Another one that is kind of bouncing back a little bit, Valero getting a little bit of a bounce back. Netflix holding a little bit of the gains. Apple, you guys already know about that one. NOC has just been beaten down so much that it's getting a little bit of a bounce, a kind of defensive name. LVS was getting a good pop off of the news this morning about Macau kind of pulling back some of the restrictions from COVID. But there you go, flipped right back to the downside. All right, we'll see what happens there. Buy now, bankrupt later. Affirm. What's going on with Affirm? How's it doing? It's down to the 2230s. I remember when I wanted to get short on this in the 40s. I think eventually you see this down towards this 13, 14, could even go down below 10. We'll see what happens there on the firm. Did see mention of Chewy in the chat. Chewy just coming down there. It just can't hold. And ever since that comment was made by none other than, of course, Ryan Cohen, well, you've seen Chewy just start turning around. And if anything, if I turn my head a little bit this way, just a little bit on the right-hand side, what do I see here in this pattern? This looks like a head and shoulders to me on the daily. Now you would have to see if it breaks through the neckline. Neckline could be always drawn also as a sideways trend there. If you break down through 30, watch out. You could easily be right back towards 22. All right, let's keep going. Let's take a look at some other kind of looks out there. I heard the White House is targeting these buy now, pay later companies. Yes, they're just increasing risk for delinquencies. We're going to talk a little bit about that when we talk about used cars and new cars coming on up. But definitely, I do agree that the White House will soon address these companies. And it's kind of like it's kind of like how you see pay loan kind of scams be run. And in my eyes, I honestly, I understand the buy now, pay later kind of strategy and what they're doing. They're providing kind of credit to people that don't have credit. But think about that. Really, do I really want to be kind of doing loans to people that can't afford the product that they're trying to buy? In the long sense, you know, when I need to buy a product that is very costly, right? Like I needed to buy a washer and dryer this year. Well, a lot of that, what did I do? Well, I took the approach that, of course, I probably wasn't going to be able to just put out the cash for it immediately, right? Put out, you know, over $1,000 for washer and dryer. That just doesn't sound smart immediately. But what did I do? I found, you know, credit to try to help me in this situation. I'm taking a credit card that, you know, doesn't have APR 0%. And then I'm taking it here on a monthly payment versus going the Affirm way. Why would I not do it the Affirm way? Well, I'm pretty sure I could have got an approval for the Affirm way, but what would that have left me? That will have left me if for some reason I cannot pay the loan back, huge interest. Delinquencies on those buy now, pay laters are massive. Once you get into that point, the interest rates go so high that you end up being over your head and a lot of times feeling like you can't get out of that loan. That's why I think it's just a little bit trappy, and I think they will be addressed in the long run. But like always, you guys make your own investment decisions there. All right, let's continue going. Let's get into some other topics that I wanted to get into today. Let's get out of what was hot and what was not. Let's go into Amazon Prime Day stepping on up. If we think about it, Prime Video has definitely made a step up. We can talk about also Netflix, Disney, some other providers, but I want you guys in here in the chat to let me know who has Amazon Prime Video. Let me know if you have a Amazon Prime Video membership, or maybe you just have a Prime membership. Let me know in the chat. Put a 1 if you do. Put a 2 if you don't have a Prime membership. And then put a 3 if you've never had a Prime membership. This would really stun me. I know I've had a Prime membership since college, and I can think back in the days. I've had that for a very long time, but it's interesting to see what you guys have comments on. But why are we talking about this, right? Let's take a look at Amazon. Amazon has been coming down in the long term, so we're talking more longer term about Amazon. We're starting to see it crack a little bit today. But let's talk about what have they been doing. Well, if you take a look at it, of course, Amazon's first broadcast of Thursday Night Football attracted a record number of new Prime signups over a 3-hour period. The company recently debuted also the long-awaited The Lord of the Rings, The Ring of Powers. This is the most expensive show ever made, and attracted more than 25 million viewers globally on the first day. So what did that show me? Well, that shows me that they're really starting to step up here in Prime Video. Not only are they stepping up with a really well-known series, but also stepping up with football, with sports, right? And it looks like the Prime signups did even better than the Amazon Prime Day. Normally, Prime Day is the day that they look to see their subscriptions get a little bit of a boost. But it looks like Thursday Night Football actually attracted more Prime signups than those other major Amazon events. So in my eyes, was this a good move or a bad move? I would say it's a good move, because at the end of the day, the more Prime signups you're getting, right, the more you're going to have access to these consumers, the more you can put out advertising for them. As we've heard, Amazon really starting to focus on advertising revenue. That's going to give them a little bit of a lift. When you're seeing these kind of course, costs really early on, it doesn't make sense, because it's, the most expensive show made ever. And Thursday Night Football wasn't cheap for them to purchase. But in the long run, what are they looking for? They're looking for more subscriber growth. They're looking to continue up their user growth way higher than anything else that's out there. Let me catch up with the votes out there. I want to see what you guys had to say. Looks like a lot of ones coming on in here. So you guys have your Prime memberships. I can't blame you, because I have one. Really surprised to see 1-3. I don't know if I was expecting to see a 3, but looks like there's a couple. Look, Dave Sanders saying that he has a 3. How do you get your stuff if you don't get it on Amazon Prime? Surprises me, but hey, who knows? All right, the music, man, library is huge on the free side. Hey, you can't go wrong with free music, right? I know that Amazon Music, and they have been trying to step up there, and I've even used the service a little bit. It's not a bad service. Hey, interesting to see that. Of course, Amazon does a lot in the audio books, and I did see Shopify kind of do a mention out there. I don't have the headline. For some reason, I think I kind of brought it down there, but Shopify, no, it's not Shopify. It's Spotify. Hold on. Let me get that right. Spotify put out there that they were stepping into the audio books. So if you have Spotify, you might see some audio books, but that's only for the US. And you can see it didn't really give them anything of a lift there. But what do you guys think about Amazon stepping up to the plate with Prime Video and kind of getting a head start there? I mean, Netflix, I think, what if they can make a move into kind of some TV streaming, right? Could they make a move into sports? Could that give them some edge in the subscriber base that they're trying to continue to grow? Who knows, right? Disney also, of course, Disney has ESPN Plus. ESPN Plus, of course, gets you a lot of the games that you probably watched last night, right? On football, you watch Monday night, and you also watch their ABC connection. So there was 2 games on last night, one on ABC, one on ESPN, both brought to you, of course, with the connection here from Disney. So we'll see what's going on in that, but it's definitely interesting to see. And Miss Whitehorse saying that she uses the Audible. Yeah, Audibles are pretty fun to kind of keep up, and especially if you're trying to get through a book quickly, easy way to get through it, get some of the knowledge, and move forward. All right, out of the Amazon Prime Video, stepping on up, I want to get into a different conversation that you guys can join in also, which is, of course, is what is going on in car price trends. So to stay up with this, there's 2 different areas that I'll give you guys to take a look into. The first ones are going to be a couple of links. I'm going to throw them up in the chat here for you guys. The first one's going to be the Detroit Bureau, of course, focusing on our Detroit location and focusing that, of course, the automaker Ford here in Detroit, they probably got a good insight. And of course, another source that you guys can take a look at, which is Cox Automotive. If you guys know, we've had before Michelle Krebs on, of course, Pre-Market Prep that is from Cox Automotive. So this is their weekly summary put out there on 9/19. So let's go ahead and talk a little bit about the situations that are going on in the car trends. And then you guys in the chat, let me know, are you guys reaching out to get new vehicles? Have you guys gotten new vehicles? Tell me about the stories that you guys been going through, and I'll make sure to catch some of them in the chat there. All right, so what's going on in these new car prices? Well, the first things to talk about is new car vehicles setting a record again in August. It now costs more than $48,000 on average to buy a new vehicle. This, of course, according to the famous Kelley Blue Book. And so I actually recently took a look at the Kelley Blue Book value on my vehicle, which I already kind of I refinanced the vehicle, as a new loan, and I refinanced the vehicle. It gave me a good advantage, and I was able to actually get ahead of the loan, not underwater because of a prior situation. But one of the things that I noticed is I looked up my car value the other day, and I still can make another $10,000 on the Blue Book value. What is this showing me? The inflation in cars is just outrageous here. That's the truth. It's outrageous. Not only is it a record high here for the price of a new vehicle, but if you think about it here, it's 10.8%, 4,712 increase just from August 2021. So we're talking about in 1 month, the prices went up almost $5,000. What does this show me? It shows me that there seems to be an issue, right? And we need to always ask ourselves, when we're looking at issues like this, is it demand or is it supply, right? Those are the two areas that we need to focus on. So let's talk about what's going on there. So if we take a look at this seems to be, at least in the short term, more of a matter about supply than it is demand. Demand is somewhat still out there because people are paying the over sticker price. Now, let's talk a little bit about the supply. Well, the numbers in new cars in the US market is at 1.2 million units, considerably lower than in 2020 and 2019. Why is it lower? Of course, we've heard countless times, like we heard from Ford overnight yesterday, that it's supply chain concerns. They're not getting the parts they need to pump out the vehicles. Now, of course, there's going to be some stronger performers and there's going to be some weaker performers, right? So it seems like this is a supply chain issue here. Now let's talk about which ones are being the stronger ones and which ones are being the weaker ones. This was brought to you, of course, by the Detroit Bureau in their report of the new vehicle price set record again. So let's go ahead into that. So we're going to look at the strongest performers here. The strongest performers right now are coming from Hyundai, Land Rover, Honda, and Kia. I wouldn't have expected to hear about Land Rover in there, but I could kind of see why Hyundai, Honda, and Kia are mentioned here. And a lot of that is what? These are going to be the cheaper vehicles, right? With the price tag that's so high, let's go towards the cheaper vehicle to try to get into the car, right? I mean, not pay such a high price. Where are it above kind of these transactions actually saw 5% to 9% above sticker. So those stocks, Hyundai, Kia, Honda, actually people are paying above the sticker price because they're trying to go for the cheaper vehicle, not realizing they're still paying above sticker price, probably getting close to those other vehicles. But the opposite extreme, right? Well, Alfa Romeo, Fiat, Ram, Volvo, Lincoln, Buick, and Volvo are some of the companies which are actually selling below sticker price. So Ram, I don't know what's going on out there. I'd expect a little bit better from you. But hey, as you guys can see, these are actually selling below the sticker price in August. At least these are the estimates given out there. Now, what's really going on, right? I mean, this is all because of lack of inventory that has led to, of course, decrease incentives. Remember when we used to see like cash back for vehicles? We used to see zero APR being mentioned out there. We used to see even kind of deals where if you brought in your vehicle, we would give you a little bit extra to go for that new car, right? Do you guys remember the period when we had the gas guzzler and they even gave us some money to go out and get vehicles? Well, this is no more. This is not what you're seeing out there. You're seeing decreased incentives. And if anything, you're seeing worse kind of sales out there, right? And a lot of this is coming from kind of conflicting battles here in the CPI. Because if you looked at the CPI, what did we see? We saw in the declining auto market, we saw new cars price increase, hold inflation a little bit higher. We saw a 0.9% increase in August, but then used cars declined, but only 0.1. So what does this show me? Used cars prices are going down slower than expected, and new car prices are going up faster than expected. So this is not what we want to see, a slowing of the prices of used cars. We want to see those prices come down if we're going to see inflation come down. Really, that's going to help the CPI report, right? But if it's going to go down at a 0.1 rate versus the new cars spiking up at 0.9% rate, well, then inflation, at least when it comes into autos, is going to continue on that upward path. And so this is also coming into concerns with credit concerns, right? I mean, let's just be honest, because if a lot of these vehicles are that high in price, what's going to happen to delinquency? What's going to happen to these loans, right? Well, if you took a look at that Cox Automotive weekly summary, you could see that auto loan performances in auto were mixed. There were severe delinquencies increase, but defaults decline. So delinquencies for 16 days or more increased 6.4%, and we're up 35.6% from a year ago. This is where the credit concerns are coming out of for the consumers, right? If they're not being able to afford the vehicle that they bought last year because the interest rates are continuing to go on up, then majority of the time, this is showing me that the consumer is strapped for money. They're looking for money. They're trying to make sure that they're being able to meet the standard living costs, right? And the standard living. But it seems like some people are getting themselves in more conditions of trouble than others. So you just got to be careful out there. And of course, why are the prices staying up higher? Also, a lot of this is because the production just can't catch up to the demand yet. And the yet here comes from Cox Automotive as we start looking at what? Demand destruction. This is the next trend that I'm looking to see happens in the automotives. Why would this come? Well, if we keep getting these interest rates to come higher and higher, that slowly but surely dries up the demand for the new cars. Even though there's low supply, that lowering of demand because of the higher interest rates should bring those prices back down. Now, what happens if they're stickier than most expect? Well, inflation comes down, but just at a slower pace. This is what I think we are seeing. So we're battling to get the used cars down, but at the same time, the new cars are going up and the demand is still there. We haven't reached the true demand destruction point where they're just like, nope, I ain't buying anymore. And so this is what we're going to be looking for in the auto manufacturers, and look into their earnings. Look to hear what happens, right? I mean, Tesla is doing really well. I mean, when you think about it, daily wise, they're looking pretty decent on the daily chart. But we keep hearing mentions from Ford, from GM about their struggles in the supply chain. And if it's showing up in Ford and if it's showing up in GM, it's probably showing up in Tesla. So we'll see if Tesla can turn around. They've been doing, better than, the legacy automakers. But definitely when you go to the lower players like Lucid, when you go to the lower players like Fisker, when you take a look at these, are they going to be able to get the car sales that they need? They're going to have to increase these price tags a little bit higher. The Fisker is coming out with the Ocean soon. I'm pretty sure that you're going to see a higher price than even they expected on their MSRP. And so this is something that we all need to keep on watch for inflation. And it's showing us that inflation is stickier than we want it to be. And a lot of it is a battle between the supply chains and the demand. What's going to give up first? Are we going to get the supply chains back high enough to bring down the demand and bring down those prices? Or are we going to get the demand low enough to kind of bring down those prices because of demand destruction? This is what we need to keep on watch. All right. Well, I hope that you guys appreciated me talking about what is happening in car prices trends. I don't do too many deep dives into stories out there, but I felt that today would be a great day to go ahead and dive a little bit deeper into inflation, where we're seeing that real tick and stickiness. A lot of this still sticky in those autos. And I mean, I'm even considering, do I go and I just sell my car, get a new one? But what we don't understand with that mentality is that when I go to buy the new one, I got a RAV4, and I remember I got it a couple years ago, decent price. Let's just round it up. Let's say 30,000. If I went to go buy that same vehicle today, what am I going to see? Am I going to see a car that used to cost 30,000 now costing 48? Well, then it wouldn't make sense to go ahead and sell my vehicle, right? Because even a $10,000 boost to get that new vehicle, it wouldn't make sense. So this is the problem that I think a lot of people are dealing with. Even though they're getting letters in the mail like, I will pay up for your vehicle. The question is, once I sell my vehicle, where can I get the new one? And it looks like I can get the new one, but only if I want to pay on up. So we'll see what happens out there. And the new one is the problem. Yeah, the new one's the problem. I agree. If you got good credit, you can get zero down for 84 months. But what happens after those 84 months? It's not a bad idea, A1, but it's not a bad one to think about. All right, let's go into out there. Let's get into the markets. I'm going to get out of the car trend talk. If you guys want to continue, by all means, continue in the chat. Now I will leave a little bit of time for ticker time here. You guys in the chat, give me some tickers that you guys want me to check on out. But before we do that, I want to give you guys a little bit of insight about what's coming on next. What's coming on next, we are actually celebrating NFT Day. What does that mean? Well, if you guys come on over to the roadmap and do a retweet on this tweet, so I put the link in the chat there for you, you guys could be entered in on a ticket giveaway for the crypto event that will be in New York City on December 7th. So don't miss that, guys. I just put in that link for you guys. Want to promote the roadmap, want to get you guys on over to the roadmap that will be coming up right after this show. Don't miss that. They're going to be talking about NFT Day and also, of course, taking a look at the recent trends. Believe it or not, there's still some NFTs making some good money out there. So come on over and catch Chris Ketchy. That'll be up next. All right, let's go ahead. Let's get into some stocks that you guys want to take a look at. Looks like Sydney will be the first one up there. Thought people would always buy fragrance and cosmetics. Ulta, not a bad one to take a look at. Let's go into it. Ulta is one of my favorite stocks, at least run. It's been run great. I mean, think about it. In a bear market, this stock has gone sideways compared to how many stocks that you know have come 70, 80% down on the 52-week. That shows me that Ulta is doing it right. Now let's think about it. It just had really good earnings, right? It spiked. That was this over here. This day right here. This is their earning day. Then we pulled back. We actually got a run towards that 430 that I was looking at. We get to 450 and we turn right back around. Now we need to see, can we hold the 400 pullback? A lot of this stock likes to run on kind of like a monthly trend. And what I'm going to do for you guys is I'm just going to delete the drawings right now. Let's start on a clean slate. If you look here on Ulta and you draw up kind of the trend line here on the monthly, you're going to be able to connect here into kind of a lower trend line that's been following it, right? Then we can go ahead and draw a top resistance. All right, so it looks like above the 426 is when we're really fighting on the monthlies. Let's go to the weeklies now. The weeklies show what? Tighter and tighter and tighter price pressure towards that 426. Now that we're getting pullbacks now, where could we look for the pullbacks to hold? If you look at it, the simple moving average 50 here has been a pretty good level to look at for those kind of turnarounds when you cut through, and about 1 day after, a lot of the times we recover. And I can show you those trends that I can clearly see right here. 1 day cut low, recover. 1 day cut low, recover the next day. 1 day cut low, recovered the next day. You did get a little wick down there, but you recovered. You made it back up there. Look at over here. 1 day cut low, the very next day we recovered. Another day, cut low, recovered. Cut low, recovered. If on the last kind of cut down, 1, 2, 3, 4, 5, 6 times we've recovered through that 50 SMA, well, just look for that trend to repeat. We'll look for a kind of a pullback into the kind of the moving average. We're probably going to see it closer towards right below 400. We're going to look for a crack for it to hold. And we can even kind of look towards the left and look kind of at some pricing. I would look for around 377s to hold on that downside. Come back up through the 400. When we come back through that 400, I look for Ulta to get back up towards the 450. And this stock is one of those stocks that just doesn't want to go away. Unless you're feeling like we're going into recession, and recession means that women don't buy makeup, or that men aren't going to go into Ulta to get some cologne, because that's what I did too. I will let you guys know. That's where I get my cologne. They got the good stuff. But definitely, it's not only just women, right? There's still some men products that are in Ulta Beauty. And if you think that these are going to turn around, a lot of the times I would say no, because women are still going to need to go to the office. Women are still going to need to be kind of dressing up to go out. Will there might be a recession? Could there be a little bit of cut of spending? Yes, there could. But if they got through the pandemic and were able to keep their numbers on the rise like they've been doing, I wouldn't bet against Ulta. Head and Shoulders on the daily, I don't see that. If you're calling this a Head and Shoulders, I wouldn't call this a Head and Shoulders. Let me just put this up. Are you calling this period right here a Head and Shoulders? If this is what you're calling on the Head and Shoulders, I don't think that's a Head and Shoulders to me. But hey, to each his own, right? I mean, maybe you're going in a shorter time frame and you're looking at it like this, then it doesn't look too bad. It didn't really get back here towards the left shoulder, though. You didn't really get that spike back. So, of course, you don't need to always make it right back to the left shoulder. But in my eyes, it would need to have made that little push up towards the 430s and then gave the fade away if you were looking at a Head and Shoulders pattern there. And Head and Shoulders, I feel like really what you're looking for is in the overall trend. If I saw it on the weekly, then I'd be a little bit more concerned, right? If you look here, Microsoft, look at this Head and Shoulders. Look at this Head and Shoulders right here. So look at this period. Look how this kind of aligned there, right? That to me is more of a Head and Shoulder, and that's on the weekly. Daily outlook there, how does this look? It's not really clean, right? It's not perfect, but to me, that's more of a Head and Shoulders on Microsoft. All right, getting out of this, let's keep going. I'll take some more stocks from you guys on out there. Tesla dumping, says Jet. That's definitely something to keep our eyes on. As Tesla dumps and Apple dumps, so probably will the market. And now Tesla getting back here towards their opening price at 307.39, back below that, going back into the red there. Apple, what's going on in Apple? Apple can't make the bounce right now. It might just slowly leak. You could even get to unchained on the open, but the SPY with that push down from Tesla, I could look for it to kind of take out that 382. We talked about that before we started the show. Of course, we started the show up here. Now, look, as we take out that low and you're seeing Tesla turn around. All right, we'll see what else is going on out there. Can you check ARR, Wally W? I got you, Wally. That's what I'm all about. Let's go into it. All right, let's go into ARR. Okay, this is Armor Residential REIT. Of course, when you go into REITs, I think you need to do a little bit more research, but I'll just go off of it strictly technically. All right, if you look at the daily chart, what can we see on here? It's just been, this stock hasn't really trended. Even though it's been kind of more in a downtrend, it hasn't really kind of gotten out of that downtrend. If you think about it, look at this weekly. This is kind of like the high on that weekly where it was trying to get on up. I would draw a trend line like this, and I would say, unless it gets back above that trend line, I'm playing this to the downside. This hasn't turned around. Of course, you might be trying to get some dividend play in this, and I can't blame you if that's what you're doing. But look at the monthly on this. Do you think this is a change in trend? This has not changed in trend since it came out in 2010. It's just been on a downturn, guys. Downturn. So in my eyes, until you see that trend change, there's way more opportunities in the market. But if for any reason you're chasing kind of dividend plays, that change everything up, right? Now you're just chasing income. Now you just want to see this not go down as much as you're making that dividend percentage up. We'll see what happens there. ARR, Armor Residential REIT. It's a dividend trap. I thought so too, Brian. At least that's my outlook on there. All right, let's go ahead. We're seeing rumors that 75 basis points is priced into bonds, but not into equities. That could be true, Jonathan, but whenever you hear that word priced in, remember it's an opinion versus a fact. They can't factually check that, right? They're going to be able to make some kind of guesstimates, but they're guesstimates. They're just that. All right, Brian said, I used to own it. Well, then you probably know a little bit more than I do if it's a dividend trap. All right, Cat put hits on puts. Next warning after NUE. Ooh, we'll see. Did they put a alert out there? Let me go ahead and check. Let me check my Benzinga Pro. I had Benzinga Pro around here somewhere. There it is. All right, let's go towards it. Let's take a look there. Did Cat put out a warning there? Nothing right now. I mean, it could be something that we can look for. Is that what you kind of mentioned, Jay, that you could see this coming in? We'll see what happens. It's definitely getting hit. There's a long-term trend on CAT that I was looking to see if we were going to catch the bounce there and get back up towards the 200. It's looking like we're kind of cutting down through that. And that's on the monthly. Take a look at the monthly on CAT. That's a nice little long-term trend. But you can see here on the daily, we're looking like we want to cut through that 172.70. If we cut through there, the low on the 52 is 167. But I feel like if it cuts through that 172, watch out for that 160 and 150 pullback. And then we'll see if CAT can catch the bounce. All right, that's going to do it for me, guys. I stayed a little bit extra. 2 o'clock, 2:03. I know I started at 1:05, so I tried to go a little bit extra with you guys. I hope that you guys enjoyed today's show. Going to get you on over now to the roadmap action. Don't miss it. Remember, I gave you guys the link. If you guys want to get your own ticket, of course, on over to the NFT event and crypto event that we're going to have in New York City. I said it, Benzinga in New York City. Don't miss it, guys. There's the link. You can get your chance to catch that, enter the drawing for the free ticket to the future of crypto. Don't miss that. That's coming on next. Chris Ketchy will be talking, of course, and you don't want to miss that. All right, I'll see you next time. Hit the like on your way out and keep rocking on. I'll see you guys on Monday as I head to, of course, the New York Stock Exchange and Qualcomm's Investor Day. Wish me luck, guys. I'll see you next time. Hit the thumbs up on your way out.